Hi everyone and welcome back to the Fix podcast. I'm your host today, Rick, and I'm joined here today with Laetitia Visconti. Hi Leticia.
Hi,
How you doing?
Thank you for having me.
Yeah, all good, all good. You excited?
Yeah. Yes.
Good. That's what I like to hear. Excellent. So Laetitia, why don't you start with a bit of an introduction, a bit of background about yourself?
So I'm Laetitia Visconti. I joined Aquis a little bit more than a year ago to lead all our effort on what we call market structure. And recently in February, I was asked to look after product innovation for the MTF as well. So prior to Aquis, I spent 14 years with an investment bank, and prior to this, 7 years with a software provider in financial services. But I did start my career completely outside of financial services because my first 4 years were more in network, basically TCP/IP routing, switches and routers, these kind of things.
Super technical stuff.
Yeah, I'm an engineer by training,
Amazing.
so I ended up doing market structure by pure chance
Cool.
or bad luck. Depends which way you're looking at
Well,
it.
we'll figure that out today in this episode. That's great. No, thank you for that. So today we want to talk about market structure, and I think we want to kind of dive into a bit of an introduction into what that is. I know when I started in the financial industry, someone threw around the idea of market structure, and it was an alien concept to me. So could you kind of give us a bit of an explanation as to what market structure is to start?
I think it's a very good question, and it's something people ask very often, but what is actually market structure? Very often what I answer is it's a little bit like studying an ecosystem. You want to understand who are the players at play, you want to understand how the relationship works between one another, and what is the perfect equilibrium between different market participants. So for me, market structure is very much about understanding the environment in which you're operating. And obviously, depending on your function in the market, it's going to have more or less subject relevant to you. It's going to have a different perspective on things, but it's very much about understanding what you're operating in.
Okay. And so when we're talking about market structure, and you mentioned that there are different sort of participants and arguably different angles that people take depending on their circumstances, why should either people or institutions care about market structure then?
Because it gives you insight in where the market is likely to go or not to go. Because for me, it's something that works at the crossroad of what I will call product, client, regulation. The three have to work in sync for you to actually find the sweet spot for your business, but also to understand how a change is going to potentially redistribute the cards, how it can have an impact on the workflow. So what I usually say, I never look at market structure in isolation to how a business is being run. It's always how this is going to impact the product I'm providing to clients, how it is going to impact my clients and the ability to continue to run the business the way they run. Is it creating hurdles to what you want to achieve? Is it creating opportunities to what you want to achieve? So it's very much kind of understanding how things fit together. And when you move one piece of the puzzle, how does the whole, basically the whole board game is being reconfigured? So it's, for me, you can't really have a proper business strategy if you don't ask yourself what are going to be the constraint or the opportunity that the rewriting of a regulatory environment can bring.
Okay. And you mentioned these kind of changes have these effects on sort of the market in general. What kind of events could you kind of give us as examples that have had significant impacts on the market?
You have so many examples of this. I think the most obvious will be MiFID. So MiFID I was all about introducing competition. That is what allowed companies like Aquis and other MTF to exist. Prior to this, you only had one shop to go and buy your French stocks versus your German one. So MiFID I, 2007, basically brought this in. MiFID II started to look at what was happening off exchange, and that's where we have the concept of the systematic internalizer actually coming into play and really being implemented. Because some of the rules were tweaked, you couldn't do off exchange without going into either a systematic internalizer regime or leaving your revenue execution as being once in a blue moon. So this kind of event, they're basically reconfiguring all the flow. If I'm translating this into workflow, which is what I do every single time we have a market structure change coming our way, is prior to MiFID I and MiFID II, you had like let's say, in between MiFID I and MiFID II, you had basically what we called at the time broker crossing networks. So brokers were basically matching their client flow with potentially a little bit of liquidity provision from prop firm or quant firms. MiFID II basically said, you can't do this anymore because if you do that, you're on exchange. So that was one of the impetus that led to what we call now liquidity provider SI. So they extracted themselves from the BCN. They started to provide quotes outside of BCN that then brokers started to consume. Again, the workflow reconfigured itself. Fast forward, MiFID II, you basically have also a number of change in terms of where you can execute, where you can't. And we had several adjustments to this. The share trading obligation rule had to be adjusted to make sure you were not being prevented to trade US stocks in the US because you had little niggle in the rule that had not been designed properly the first time around. So it's very much about understanding the global ecosystem, but being able also to dive into the details. Brexit was another one. Short selling bans are another one where you constantly need to look back of what does the regulation say, how does that impact my flow, what do I need to change in the way I execute. So it's a key driver. Some people find this a bit like dry. Personally, I don't, because I always see kind of like it's constraint you have to play with and you have to play sometimes against and trying to find way of reconfiguring things. So intellectually, I find this extremely rewarding and challenging.
Okay, that's great. No, that's quite insightful there. So you mentioned you kind of started with that very sort of technical engineer-focused background, and now you've become a market structure expert. How would you say that kind of journey has taken? And if you sort of describe it as you've got people watching this episode today and they think, oh, that kind of macro aspect of the markets, that sounds really interesting. How do I get started in that? How do I kind of go into that role? What would you kind of suggest as a way to do that?
What I would say is you need to basically ask yourself, do you like to work with people from very different backgrounds, very different type of roles and responsibility? You cannot do market structure if you're not able to talk to client, talk to your trading desk, basically the business within your firm, get on well with legal and compliance and have them actually challenging the view and helping you to understand how this needs to be implemented. And the last one, you need to have a real decent understanding of how the workflow works and what does it mean for trading architecture. And in trading, whichever asset you want to talk about, you cannot understand how the business runs if you don't understand the underlying technology. Personally, that's what motivates me on this kind of subject, because you feel you're at the crossroad of every single function into the firm. Now, you will have people that like very much more the government relationship part of market structure, which is much more about, I would say, advocacy, lobbying, these kind of things. I do think that having a decent understanding of what I call real life is really important if you want to succeed on this type of job. Unfortunately, there's another aspect of the job that you cannot go without, is you need to read a lot.
Yeah.
So I remember people making fun of me in my previous job because I had piles and piles of paper on my desk. I was building a wall of regulation. You go like through a lot of text. You need to understand how these things are going to imbricate themselves with the existing regulatory framework. You really need to pay attention to the details. Because in regulatory text, in legislative text, one word different from one version to another can actually trigger a completely different outcome. So it's kind of combining the ability of being extremely detailed in the way you're analyzing things, but being able to extract it back to what is the essence of it and what is going to be the likely outcome of decision taken at the Parliament, at the FCA, at ESMA, at the European Commission level, and really understand how this is going to reconfigure things. And is it a good or a bad thing for the market, which for me is a huge driver, is making sure we're crafting our regulatory environment to give the best chance for this region to attract flow, attract investment, and basically for everybody to be able to run their business in the most successful way possible.
Okay, cool. No, that sounds Yeah, it does sound like there's a lot of detail to go through. It
Yes.
does sound like there's a lot of
page
aspects.
turning.
100%, yeah. But as long as the information is page turning, then it sounds great.
Yeah.
Good. So, last question for you, Letitia. From a retail perspective, because I know in recent times we've spoken a lot in the industry about retail investors, do you think that they need to be involved in market structure? Do you think they need to have some kind of awareness in it? What's happening with the markets as they shift?
I think they do need at least a very basic understanding on how trading works, especially in equities. So if I was to make a parallel, it's a little bit like you wouldn't expect anyone to understand the inner workings of a supermarket, but you will expect everybody to know you can buy your pack of sugar from several shops. Mm-hmm. Right now, I feel that the retail are still in kind of this view of the primary exchange, the national exchange, and not realizing there is liquidity available in a much more diverse sources, whether on venue or off venue. So I think a little bit more knowledge wouldn't hurt, especially when it comes to understanding that our issuers are much more liquid than people think in the first place. I don't think they need to know the inner working of the share trading obligation or the SI regime or these kind of things, but a little bit more awareness, understanding that our markets are very similar in many ways to the US market, which are very dynamic, can only help us on the long run, especially when you look at the fact that motivating the retail to invest in the European region, whether you're talking in the UK or in the EU and even to an extent in Switzerland, is so important to the outcome we want from a geopolitical point of view. Basically having people's savings being channeled towards funding the real economy, and that means funding our issuers first and foremost. So more education, yes, more education on where the volumes are, but also more education on who our issuers are, because there are a number of them that are really worth investing in on the long run.
Yeah, cool. Letitia, thank you so much for your
You're
time.
welcome.
Really appreciate it.
It was a pleasure.
Thank you so much for everyone who's watched to the end. I know we've got a ton more episodes coming out soon, and there are also a ton of episodes that have already been filmed that are awaiting your viewing pleasure. So thank you so much, Letitia. Thank you everyone for watching, and hopefully see you guys next time soon.
Thank you.